M-Tron Industries shares many of the same characteristics as Kraken Robotics. They both provide mission-critical components to the defense industry, both have technologically superior products, and both have been GAAP profitable despite sub-$100 million revenue. So let's dig in and see if M-Tron stock will be next and surge just like Kraken has. To really understand M-Tron, let's first look at their main customer base. Key in here on the defense industry and can see that they serve all the major defense contractors: Northrop Grumman, Lockheed Martin, Raytheon, Thales, etc. For these defensive customers, these components are embedded in many applications: precision-guided missiles, drones, and radar, for example. For these applications, it requires accuracy and quality to be at its best, and that is what M-Tron enables. M-Tron is a manufacturer of two key electronic components: oscillators and filters. Oscillators are the heartbeat of any electronic system. They create a stable electronic signal that all operations in the circuit utilize to coordinate and sync with. Filters, on the other hand, are the gatekeepers to this electronic signal that is set to ensure that only the useful frequencies are kept for the rest of the circuit to use. To illustrate this, let's look at an example. Let's look at a precision-guided missile. For these missiles to understand its location, it is dependent on a GPS and navigational system to measure time intervals accurately. The oscillator ensures that the time-in is accurate, as any drift in the time-in will mess up the missile's speed and position. The filter blocks out unwanted noise, so prevents the missile from being jammed by enemies sending distracting frequencies. Together, the oscillator and filter allows the missile to maintain pinpoint accuracy to their strike targets. Without these components, the most advanced military technologies will just not be possible. Looking at M-Tron's financials, and revenue growth since 2021 has been impressive, and it's grown at 18% CAGR. The primary driver of revenue growth is the armament and weapon systems replenishment driven by the many global conflicts that have taken place in the past 5 years. The adjusted EBITDA has also grown at about the same rate to be now at the 23% EBITDA margin rate that Kraken is. So far, so good, right? Lots to love about M-Tron with its essential supplier status and strong and profitable revenue growth. But here is one big negative. M-Tron's adjusted EBITDA margins long-term are projected to remain the same at 21 to 23%, and revenue growth is expected to only be 10% growth organically. Kraken, on the other hand, was 30+% CAGR for revenue growth outlook. With that said, let's run M-Tron through our valuation model to decide if, despite these slower growth rates, if M-Tron is still a good play due to an undervalued status. Before we do, please read the disclaimer in the notes below. We are not financial advisors, and anything we say should not be taken as financial advice. Also, if you like content like this, please help us out and click like and subscribe as we aim to cover the most innovative companies twice per week. Now let's look at M-Tron's valuation. On the business lifecycle curve, I have M-Tron here as a mature company. M-Tron has operated since 1965, so it's really entrenched itself as a leader in RF innovations. However, with organic revenue growth only grown at 10% annually, this is not a high-growth company. Due to this, as a mature company, I will be evaluating M-Tron with a PE ratio. So let's start at revenue, at which, at the end of full year 2025, it is estimated to close at $54 million. Now, assuming 12% annual revenue growth, which is 10% organic revenue growth guided by M-Tron's management, plus 2% growth from just any acquisitions, this gives M-Tron a revenue of $95 million in 2030. Since EBITDA margins guided are expected to remain the same as now, I will be using the trailing 12-month net income margin for M-Tron, which is 15%. For a company growing at low double-digit revenue growth, backed by the stability of the defense industry, that warrants a premium PEG ratio of 1.5 versus a value play of a PEG ratio of 1, I would give M-Tron a PE ratio estimate of 18. Putting all this together gives M-Tron a 2030 market cap of $256 million, or $87 a share. This is lower than my target 15% annual returns, so not a great value. Now let's look through my 5-point framework to determine if other variables will outweigh valuation to make M-Tron an add for our portfolio. From a leadership perspective, I give M-Tron a week. They currently actually do not have a full-time CEO, so have as an interim leader their CFO, Kimrem 4. For a company like M-Tron, I would love their leadership to have someone with deep defense industry experience and with an engineer and product strategy background. Kimrem 4 has neither, with his background in investment banking and in finance leadership positions with cybersecurity companies. For a valuation perspective, I give them a week, as expected to return 8 to 12% annually based on my 2030 valuation analysis, which is below my 15% annualized return target. For revenue and profit growth, I give this a neutral. I like that they are already GAAP profitable with relatively low volume, but I'm not thrilled with only 10% organic revenue growth, as there are many other companies like Kraken Robotics that are growing much faster. From a large total addressable market, I give M-Tron a strong. Military applications and volume are expected to rise, and also they can be utilized in the button space industry and with the commercial airline industry having their volumes recover. For tailwinds, I give this a week. For M-Tron's guidance, they believe the industry is growing at 7% annually to 2030, which really isn't that strong compared with other innovative tailwinds we've covered. It's why M-Tron's organic revenue growth is so low at just marginally better with 10% annual revenue growth. Overall, though, I am a no on M-Tron. I prefer Kraken Robotics as a small cap defense tech supplier, as Kraken's expected to grow their revenue at a minimum 30% annually, compared with M-Tron's just roughly 10 to 12%. M-Tron's components may have more optionality, and they are at a lower market cap, much lower market cap than Kraken's right now. But without top line growth, it then will come down to valuation, at which M-Tron failed my verdict there as well. What do you think, Dad, as you look at M-Tron and run it through your framework?
Thank you, Scott, for that excellent presentation and analysis. Yes, I like to do my analysis for MPTI. Okay, for number one, it has no dividend. The beta and market cap is 160 million, and earnings comes out November 12th. For that, I'm neutral to positive because of the beta. It's 25% less volatile than the S&P 500. So that's again, that's a neutral to positive. For number two, it's only beat 2 of the last 4 quarters. So that's not that good because they're the ones telling the analysts what they're thinking. So anyway, that's a neutral to negative. Number 3, the net profit margin is 15%. Debt to equity is 0. And the PEG ratio for Zacks, it says it's 0.85. They think it's going to grow around 25% for the next 3 to 5 years. So we don't think it's going to grow that much. So we're more like a 2 because with Scott's analysis, he figures the revenue is going to grow maybe 10 to 12% a year. And a P ratio being around 21-ish. So anyway, for that, it's a neutral to positive. Okay, for number 4, the 50-day moving average is above the 200. The 200 sloping positive, and the price is above both the 50-day and 200-day. So that's good. For the Bollinger Band, it's drifted towards between the middle and lower band. The volatility is decreasing. That means the bands are very, very close together. So for that, negative, because it's drifting lower. For the slow stochastic oscillator, it's 48, which is neutral. The MACD is negative, and unbalanced volume is neutral. So for that, I'm neutral to positive because of the moving average being so well. And also, like I said about the Bollinger Bands, it's drifting lower. So maybe it hits 51 to 50 the next few days. Let's see how it goes. Okay, for number 5, there's 2 analysts that are holds, 2 analysts that are buys. And one analyst thinks it's going to go to 67, which who knows? He or she doesn't know any better than us. So anyway, and then for institutions, 47% of the shares are held by institutions. So that means it could be more volatile because institutions, it takes them more time to dump shares, whereas individuals can get in and out quickly. Does that make sense? So overall, I'm not a no and I'm not a yes in the short term. I'd like to see what it's going to do the next few days, or a week. But to me, at this time, it looks like 51 to 50 is it may drift towards, and then I revisit it then, see how the market's doing in general, the macro. But being that it's aerospace and defense related company, it could go up, but let's see how it goes. So anyway, that's my analysis. So back to you, Scott.
Thanks, Dad. We both agree that M-Tron has potential to follow in the footsteps of Kraken Robotics as a supplier of mission-critical technologies to the defense industry. However, it comes down to opportunity cost, and that Kraken has higher growth outlook. We can revisit M-Tron after its latest quarterly update to see its technical pattern and if growth guidance improves. With that said, thank you for watching. Please help us out and click like and subscribe as we aim to analyze the most innovative companies twice per week. Until next time, happy investing.